Welcome back to Tommy's Take for another video. Thank you for being here with me. Please subscribe to the channel. It really helps the channel grow. Like and comment down below and also share. Today, we're going to look at a very important video for us as Americans, um, talking about the rising price of diesel fuel. Sorry, we already know gas prices are going up, but also diesel is huge for us because diesel fuel, the price of diesel affects everything. And we're gonna listen to a drop site interview with Roy Johnston. Let's get into it, and then we'll make some comments.
So what are the implications for the world economy if this timetable between the US and Iran goes on?
So what's interesting is, again, we were talking back in March and April. I was very publicly alarmed, to say the least. I talked about hitting $200 oil. I talked about kind of a global recession, depression in some areas. Well, again, I think the piece that has largely saved us from the absolute heights of that extreme has been this China pullback, which again is just swung the market tremendously to the downside and loosened it up for a lot for the rest of the world. That said, with crude at $90 a barrel, refined products are even worse. So what we typically talk about, so obviously gasoline, diesel, jet fuel, et cetera, are obviously related to the price of crude. That's the largest piece of the, what you're paying at the pump typically is the crude oil itself. But we're actually in a fascinating environment right now, where right now, diesel prices are more than double the price of crude oil. So what we typically talk about in this market is a crack spread. And that is essentially the difference between the price of diesel in the market and the price of crude oil that would go to make it, or the price of gasoline, the price of crude oil. Essentially, the implied refining margin for that particular product. Normally for this time of year, the crack spread for diesel or gasoline, this refining margin, is around $20 a barrel. Refining is usually a less lucrative side of this market than the upstream crude oil production side. Right now, however, the crack spreads for gasoline in the United States are currently sitting at more than double their normal, more than $40 a barrel. And diesel crack spreads are sitting at nearly $100 a barrel, nearly 5 times their prior, their pre-war normal seasonal level. This is, from our perspective as consumers, when we think about the impacts of this on the global economy, we're so used to talking about it in terms of crude oil because, again, typically that's driving this entire thing. It doesn't matter what your crack spreads are and your refining issues if crude's at $150, right? Everything's high. But right now you have crude high, but not insane, unprecedented crisis high. 90 is, we've been here before. But we've never had, crack spreads for diesel at this high level in this way, particularly with oil this low. So I think, and it's those products that we consume, because we don't consume crude oil. Only refineries consume crude oil. I wish we could consume crude oil right now because it's much cheaper. But you and I at the pump are paying the price of the global commodity for diesel or for gasoline. And those are their own supply-demand balances. So what we've had right now is that, again, we go back to what I was saying earlier, how we lost a bunch of refined product supply out of the Strait of Hormuz as well. There are lots of refineries in the Middle East. The world currently no longer has access to them. At the same time, China was exporting a lot less fuel as it prioritized the domestic market. And the mega piece that's happened on top of everything else that's going on right now is that the Ukrainian military has dramatically ramped up its attacks on Russian oil refineries and tankers in the Black Sea that were transporting these fuels, which is dramatically, it's pushed Russian exports of refined products to the lowest level since the collapse of the Soviet Union, basically. And I think this is these crazy, crazy levels, and it's because they've lost access to their entire kind of refining network. And you're having these massively long, gas lines and whatever else in Russia. So all that together is really robbing us of that supply. So even if we solve the crude oil issue and crude oil prices, let's say, even halved, we would still have $150 diesel right now, which is a crazy situation. I think, gasoline hits us as consumers, as like households and families. It's like a tax hike. But Diesel hits everything. It hits shipping. It hits industry. It hits your Amazon deliveries. It hits everything. And I think that is this piece that's going to have this kind of larger kind of slowing effect on the global economy.
Yeah. He kind of he was very clear in what he said. He explained himself very well. And we're going to feel this. This is going to hit us really, really hard because diesel, like you said, is the primary fuel for the vast majority of freight moving across America for heavy duty trucks, long hauling freight, commercial fleets. Okay. And when a trucker, for example, an independent trucker, for those who are truckers, they know this. 30%. I used to drive not trucks, but I drove a cargo van before for a year, and 30% of your cost goes to fuel. About 30%. So if your diesel fuel costs you more, now what? It's going to be 40%, 45%. And at that point, you're being squeezed. Your margin for profit is being squeezed. And now, um, you just have thinner margins. And a lot of trucks are going to be like, let me just park, man. It's not worth it. Or, companies, carriers are going to cut routes. Independent truckers might just leave the industry. And then even like larger carriers, they might pass the cost down by raising the rates, right? So instead of absorbing that, they say, okay, we'll just raise the rates. But then at the same time, there's just so much competition in the trucking industry that you just might lose out. Um, I know right now with there's so many trucks on the road. There's so many people driving. Actually, the rate per mile is pretty low, but supposed to be tough to get higher rates with so much competition. Um, and then it's like if you have higher fuel bills, that's going to reduce like the available capacity on the road, which is going to lead to like tighter, trucking markets. Loads are going to be sitting for a long time. Um, you might see emptier shelves in stores, and drivers are going to be very selective on the routes that they take. So, in short, what we're going to see, most likely going to see, because of the price of diesel, is we're going to see truckers having to pay higher day-to-day expenses, and they're not going to be able to absorb in the short term. They're not going to be able to. Many are not going to be able to absorb this shock, and many truckers might end up losing business or pausing operations. But broadly speaking, whatever affects truckers affects everyone because nothing goes on your shelf. Anything that's on your shelf has been in the truck. Almost everything that's been on the shelf has arrived there with the aid of a truck. So logistics, supply chains, you're going to see all of that. There's going to be inflation in that area because that's what higher diesel prices does. It's going to increase the cost of food. It's going to increase the cost of consumer goods, manufacturing. You know, and he mentioned your Amazon deliveries. If you ever on the road on these highways, expressways, you see a bunch of Amazon tractor trailers, a bunch of Amazon trailers, and what are they running on? Diesel. If diesel prices go up, your Amazon deliveries are going to go up too. And again, inflation, uh, growth pressure, and if these diesel prices stay and or even continue to get higher, um, it's just going to be overall inflation. It's going to contribute to overall inflation. I mean, I'm not an economist, but based off of what he says, based off of just common sense, based off what we've seen in the past with when it comes to diesel prices, and that's what we hope that doesn't happen. But with what President Trump is doing in the Middle East, what's happening with the Strait of Hormuz, the fact that a lot of refineries are not running at capacity, it's really affecting us here at home. So you really got to figure out what's going on here. I feel like our president has let us down. He's let America down, and we're for no reason. This wasn't a war that needed to be fought. It wasn't a war that needed to be fought. The Strait of Hormuz was open. Gas prices were so low. I mean, when I was driving, in Mississippi, I was paying like $2 a gallon just last year. $2 a gallon in Mississippi. You can't find that anymore. Again, Russia is not producing as much. Ukraine hit their refineries, so there's just a lot going on that we're just not in control of, but that we're suffering for. So this is going to affect truckers, and farmers, and then we're going to start to feel it even more when we go to the grocery store or making our Amazon purchases. It's going to hit our pockets, and this could become, a tough economy coming up soon. So I feel for the truckers. I feel for what they have to go through. They're already 30% going to fuel, and it's going to be even more. So, yeah, that's all I got. I thought that was an important video for us to watch. Go ahead and subscribe and like and comment down below. Tell me what you think. If you're a trucker, tell me what prices are like and how things are on the road. And if you're not a trucker, just tell me what your experience is with gas prices. What's your price per gallon, where you live, what state. And yeah, this is Tommy's Take, and we are signing off. Peace.